Hello everybody, welcome to Talk About Houses. I'm Todd.
I'm Oana.
Today we are going to talk about benefits of home ownership. We have a bunch of notes. We're going to go through these one at a time. So we're going to talk about, there's some financial benefits and then some other benefits. I call them emotional benefits, but I think they're important things. People buy homes for two reasons. One is the emotional reason, okay, and all the benefits emotionally, and then the other is financial.
Right.
So let's start with one of the first ones, which is stability.
Right. So, the nice thing when you own a house is that you know where you're going to be tomorrow. You don't have someone else controlling what happens to your domicile. If you are renting, then it is possible for your landlord to not renew your rental agreement, and then you have to go find somewhere else to live. But when you own your home, this is your home. This is the place where you're going to be laying your head, planting your flowers, doing all those good things. And it will be here today, tomorrow, and the day after. So that's a nice emotional benefit. That stability is huge for all of us. We all want to know that there's a place we can call home where we're safe.
I did meet somebody one time that lived 17 years in a rental house, the same rental house. Like they moved in when their kids were like small, and they like both graduated high school. They all grew up in the same house, but they were tenants. They were renters. They never owned the house. They just paid rent the whole time. That's very rare. It's extremely rare because things happen. People want to sell maybe the property, and maybe the new person says, hey, I'm going to move into it. Or, you just get a new investor who wants to raise rents even more. Maybe you were getting a good deal on rent, so you didn't want to move. So the stability is very important. And then like Oana said, being able to change the landscaping or change you're not going to remodel the house of a rental. You're not going to go, hey, I hate these ugly cabinets. Let's tear them out and let's put in quartz countertops, and let's put in wood floors, and let's do all this stuff to the house and drop $50,000 into it, make it really nice. Because of rental, you're not going to fix up somebody else's house, and your landlord's not going to fix up the house for you.
Right.
Because it's not a good ROI, not a good return on investment.
Right, and just simple things like, putting different window coverings on that you like better, or painting a bedroom a different color, or just simple things like that you have to ask permission for. Look, when you have to ask permission, at that point, you realize that this is not your home. This is somebody else's property that you are just borrowing.
Another interesting aspect is there tend to be parts of town that are mostly renters because investors have bought because the numbers make sense. And then there's other parts of town that tend to be owners. And in those areas, the crime rate is less.
Right.
Like if you're a homeowner, you're statistically less likely to be a victim of crime than if you're a renter. Right.
So that's for a lot of reasons. One of them is because the neighborhood rather tends to be more stable. There tends to be more cohesive. People tend to know each other. People tend to watch out for each other. So, obviously that can happen in neighborhoods where there are tenants as well. And there are tenants everywhere, no matter what neighborhood you're in. But generally speaking, homeowners tend to be less likely to be victims of crime than tenants.
Another advantage is that you will keep the home in better condition, and you will enjoy your home more.
Right.
Then, you won't let the yard die and other things because you have this pride of ownership.
Right. So remember, when you are the homeowner, that means that when something breaks, you have the opportunity to fix it. You're not depending on a landlord or a property manager to get estimates, to get permission, to get whatever to have it done. This is yours, and you are going to take care of it because it's yours.
So let's talk about some of the financial benefits.
I'm all about the numbers.
All about the numbers and the money.
The money, yes. So, we start off with the obvious ones, things like interest deduction, property tax deduction. So those are big financial incentives because that's the government subsidizing you to be a homeowner. And then we go into things like equity. So that means every mortgage payment you make, part of that mortgage payment is principal. And when you make a principal payment, then your equity in the home grows. The other thing is, of course, appreciation. So as the property values increase, then so does the market value of your home, and that's the appreciation. One of the things that people sometimes underestimate is the fact that usually the largest mortgage payment is the one that you start out with when you first buy the house, and then the mortgage payment either stays the same or usually declines. And the reason for that is because a lot of times people will refinance the home, and when they refinance the home, then that usually lowers the mortgage payment. Sometimes they take equity out of the home to do something else with it, maybe do remodeling, maybe pay off some debt, whatever. But it's that stability again of knowing what your payments will be month in, month out, year in, year out, that you don't have when you're a tenant.
Homeowners statistically have about 55 times the net worth of non-homeowners.
Right.
That is skewed because pretty much like all billionaires own homes, right?
Right.
So but that's just a few people. And then, of course, pretty much everybody who's poor doesn't own a home because they're poor.
Right.
So it skews the numbers. But still, you get the point. Then it's just, look, if you're paying the exact same amount for rent that you're paying for a mortgage, and in a lot of cases, that's not the case. We have investors who are paying less in their mortgage payment than their tenants are paying. That's why they're buying these investment properties. There's cash flow every month. So if you're paying the same amount, it's just going away. You're losing tax break, and then you're also not building up any equity.
Right. So it's important, like I said, to remember that rent payment goes up every year, but that mortgage payment generally does not.
We have some numbers here. So these numbers are over the last 5 years. Every single state in the U.S. has had home price appreciation.
And it
includes New York and Massachusetts and Illinois, where people are still leaving. Mm-hmm. But then you have immigrants and things where people come to those states. Right? And then you have, over the last couple years, Washington, Nevada, and Idaho, over 55%.
It's amazing.
Over the last 5 years. And Idaho actually last year was like pretty substantial. It was the highest in the nation. Colorado, Texas, and Florida are starting to catch up and have pretty good numbers. Even Illinois, 15%, which is like people are just can't wait to leave Illinois. West Virginia, 12%, and that's pretty much like nobody intentionally goes to West Virginia. You have to be sentenced. And if you're watching this from West Virginia, I apologize, but it's the truth, right? It's very rural, and there's not a lot of industry there, coal mining and stuff. So, and it's very stable, like population doesn't change very much. Another reason, your credit. So let's say that you're a tenant and you don't have a mortgage payment, but you have a credit card, and that's it.
Right.
And then your next door neighbor owns the house, and he's making mortgage payments. Now you pay your rent every month on time, but you don't get credit for that.
Right. I mean, there are some plans out there that give you some credit for on-time rent payments, but by and large, rent payments are not something that the credit reporting agencies keep track of, so you don't get credit for that. But when you make your mortgage payment on time, that does get tracked because you do get penalized if you don't make your mortgage payment on time. So by making your mortgage payment on time, that improves your credit. So remember, an improved credit benefits you in many ways. Generally, it lowers your insurance premium, whether it's homeowners insurance, auto insurance, health insurance. It may even open the door to a better job because remember, employers are checking your credit because your credit leads them to believe that you're a more responsible person. So having a good credit score makes a big difference, and being a homeowner is a good way to improve your credit score, providing that you make your mortgage payments on time.
Here's another advantage. You get that 30-year fixed rate loan, and that mortgage payment, $1,800, whatever, it's the same. It doesn't change.
Right.
If you're a tenant, what's it doing every year?
Rents go up every year.
Rent's going up every year. This is a really interesting phenomenon because, you think that $1,800 is like, that's a lot, but remember that over 10, 20, 30 years, that that inflation is going to make that payment much less. I mean, $1,800 is a lot right now, but in 10 or 20 years, people are going to be like, how much your payment's only $1,800? That's nothing, right? Because maybe wages have doubled in the meantime. So you have a fixed, predictable amount that you pay for living, and that's a huge financial advantage. And your next door neighbor who rented, their rent is going up. So 10 years later, you're at a barbecue and they say, yeah, my rent just went up. It's now $2,450, and you're like, wow, well, I still pay $1,800. And they say, oh, my rent was $1,800 when I moved in. And he go, yeah, but I got 30-year loan, so I'm just paying the same amount every. And you could, if you wanted, you could pay a little more and pay down the loan sooner, right? But if really low interest rate, doesn't make sense to do that, because it probably makes sense to either buy another house or other investments.
Right, but whatever you choose to do with the extra money, it's still money that is now in your pocket as opposed to in the landlord's pocket.
Yeah, just remember, it's like the analogy of when you come to Vegas and you see all the super nice casinos and the lights and the fountains going off and everything. Where do they get their money? They get it from you. So where does your landlord get his money? He gets it from you if you're a tenant.
That's right.
So, obviously there's the benefit of homeownership. That's one of the benefits is huge financial benefit. I think it's a huge financial benefit. Mm-hmm. So anyway, if you like the video, please share it. Please comment. Tell your friends about it. And what else?
Subscribe, hit the notification bell, share it with your friends, and see you on the next video.
Right.
Bye.
Bye.